Welcome to another episode of the Wealth Building Strategies podcast. I'm your host, Jeremy Constantino, and today I'm honored to have on as a guest Perry Zheng. Perry, welcome to the show.
Thanks, Jeremy. Nice to be here.
So, for those of you that do not know Perry is an incredible entrepreneur and real estate investor and somebody who's in technology and has grouped all that together to provide a wonderful solution to real estate investors. So, Perry, I guess, I'm going to start by saying a couple of your accomplishments. You have been a sponsor of over 1,000 apartment units. Is that correct?
Yes.
And actually a passive investor over 3,000 units. And I'm looking here at portfolio value of over $86 million. So congratulations in your real estate achievements.
Thank you. Thank you.
And what's even more impressive is that you have now started an own technology company for an investor portal called Cash Flow Portal, which you started in 2020. Is that correct?
Yep, that's right.
And starting in early 2020, you already have over 400 co-sponsors and sponsors using your investor portal, which is phenomenal. And I think the numbers show that those sponsors and co-sponsors are managing over $100 million in assets under management through
Um,
that portal.
Probably it's about 500 million in equity under management.
Okay, fantastic.
Yeah. Mhm.
That's impressive in such a short period of time. So I guess for our listeners, I guess kind of let's start from the beginning. I guess what got you well, I guess what's your background and what's your how'd you get into real estate?
Yeah, absolutely. So my name is Perry Zheng. I am founder and CEO of Cashflow Portal. I live in Seattle. My syndications are in Dallas, Texas. I started my journey being a software engineer at Amazon, Twitter, and Lyft. When I first joined Lyft, it was 300 people. When I left, it was 3,000, one of the early employees. I started doing single families back in 2015. Bought my first single family or condo actually in the Bay Area. Then I started house hacking in Seattle. I bought about 5 or 6 single families in the Bay Area and Seattle. Really maxed out my debt to income ratio. That's how I get into multifamily. The first deal is a 172 unit apartment complex in Dallas, Texas. I raised about 3.5 out of the $4.3 million on that deal. And I was extremely lucky because Lyft went IPO a few months before that. And all my network and friend circle were technology, engineering managers, and so on. 2020, we did a 408 unit. 2021, we did a 236 unit. And then this year, we did a 208 units. The first deal, it was all DocuSign. Second deal, it was a really large syndication software company. And then the third one is I was using my own portal. And my investors were like, oh, I like this new portal better than the old one. And now I know that was candid feedback because I was still at Lyft at the time. So I couldn't disclose that I owned the company. So I knew that was candid feedback. That was the impetus for me to quit my job, and we applied to YC. Right here, that's the logo. That's the incubator in Silicon Valley where Dropbox, Instacart, Airbnb, Stripe, DoorDash all graduated from. So it's a very prestigious incubator program. And we pride ourselves in like having good engineers and so on. And so now we have about 30 employees off to the races.
Fantastic. So what made you start getting interested into real estate in the beginning?
Yeah. So I that's a great question. My parents grew up lower middle class. They own a restaurant, and they have some real estate in China. And I actually was very anti financial freedom when I was a kid because I didn't like the fact that my parents were so financial freedom driven. So I was pretty rebellious until I bought my first condo in the Bay Area. So maybe some lesson to the audience is some people will just don't get it, or don't want to get it until they get that very first house. The light bulb start lighting up in my head that I can live in one of the rooms and rent out the other 2 rooms. I don't mind living with housemates. I should prefer having housemates. So, and that was a three-bedroom condo. I actually live in the master room. Then my financial freedom urge became stronger. I live in the medium-sized room. And then before I left that house, I live in the smallest room. So I live in every one of those three rooms. That was the bug that I needed. Basically, I created a spreadsheet, say if my mortgage is this and I'm paying this amount, the delta is, oh, this is cheaper than what I will have paid to rent. And I'm building equity, I'm paying down debt, and I get some deductions. So I didn't even account for any of that. So then that was just luck. I bought it, you appreciate it, got a really nice return. The next few is all I met my real estate business partner on Bigger Pockets. I met him in Oakland, California. And I was in San Francisco, California. I remember every weekend I drove to Oakland, meet up with him, drive to Fremont to have dinner with my friends, and then went to Stanford to play ping pong. That literally was the whole trip, the round trip of the Bay Area every Saturday. So during that time, I did a lot of things. We strategized on how to buy the next single family. We did not know anything about syndication at the time. We also strategize on how about financial freedom. So I read the Rich Dad Poor Dad. I watched, listened to the Bigger Pocket podcast, which had a huge influence back in 2014, 2015. So then we decided that the Bay Area was too expensive. That's how I moved to Seattle, moved back to Seattle actually, and start buying single families with 5 bedrooms. I live in one of them. I rent out the other 4. So to this day, I'm still very frugal when it comes to my living expenses, and I felt like that was a really good, training ground for me to stay kind of humble and stay keep my living expenses low, such that I can be more adventurous with my career.
Yeah, that's an interesting path to getting into real estate investing, is really starting out with your first primary single family residence. And that's my story as well. So I just started out with my very first single family residence, then I get another single family and get another single family, and it just starts snowballing. There's, in Rich Dad Poor Dad, Robert Kiyosaki says, oh, your primary residence not an asset. Technically maybe not, but for you and for me and many others, it is that first step to getting into real estate. You start learning the knowledge, you start learning how the realtors and the brokers work, what's a good deal, what's not a good deal. So I can't say yes, if you haven't gotten into real estate yet, to get a primary residence, but maybe on the West Coast it may be too expensive and you may need a house hack, but maybe in the Midwest, start out with a single family.
Absolutely.
So then talk about now getting into multifamily.
Yeah. So 2017-ish, we went to a mentorship group boot camp. And I initially thought it was like a pyramid scheme. I'm doing my single family. I like the single family thing. Why would I join this kind of multifamily like multi-level marketing? And so I went back, we did a 7-unit. So the 7-unit was actually not in the count. That was really good. We got our investors about 68% return in 18 months. It's basically a 7-unit flip in the greater Seattle area. And then we tried to buy this 20-unit in Seattle, very close to Seattle. What I found was that we were outbid. That was our first, obstacle. And I think we had the same price, but we were outbid because the other buyer had a management company in Seattle, had like $400 million of assets under management in Seattle. Of course, we should lose. We're supposed to lose. And so the next time I went back to that multifamily boot camp, it's the same boot camp. It didn't matter what that person said, I will sign up, and we did. And then a year later, that's how we did our first multifamily. So one really meta point, though, is in the very beginning, if you ask me what's multifamily syndication in 2015, I still didn't know. It wasn't until 2017-ish that I heard of this thing. I rejected the idea. And then it wasn't until I failed myself, then I went back and say, okay, because when you try to scale, you naturally need more money. And you basically, as a GP, you are getting compensated for your skill set. It's basically a talent trade, right? People trading their money for your talent. And so you do need to raise money. And the only, well, not the only legal way, one of the most common legal ways is this thing called syndication. So it's not like this brand new idea, it's just how you scale. This is the legal way to scale. So it made more sense. And I joined, and I'm very, very glad. I don't think without the mentorship program, we will have the number of units we did. That was a very good jump start.
That's interesting. And everybody that I talked to on this podcast and all the successful entrepreneurs and real estate investors, they're all part of a mastermind, of a mentorship group, of some sort of coaching. They've partnered with people that have done it before. So say the name of the mentorship group. Is it
Yeah.
still in existence?
Initially, it was Brass Samurai. I'm still part of Brass Samurai.
Okay.
Mhm.
Fantastic.
Mhm.
Okay. So when you started the syndication, how did you did you have a portal at that time, or how did you manage it with a spreadsheet, or because that's what I did on my very first syndications back in 2015. I managed everything on my on just a spreadsheet, and I did everything by hand.
Great question. So the very first deal, it was all spreadsheet. We have 75-ish investors. They will sign the DocuSign. I was smart. I create the DocuSign templates. So I already was a step ahead. Some people actually create manual spreadsheets for every investor. So they will sign it, they send it back. I countersign, I put their address on another spreadsheet that have basically their exhibit A. I have their investment amount, and in the future, when we do distributions, we have another spreadsheet. And I think the one aha moment was one person that invests 100K wanted to split the 100K into 50,000 IRA and 50,000 joint tenancy. And I said, I could not do this anymore. I could not create three DocuSigns for one person. So that's when I start wanting to build the software. And I looked around, and I was at Lyft. We are building some amazing software at Lyft. And I was basically surrounded by people who work at Google or Facebook. So I live in this very interesting world that I understand this is not that hard to build. I think I could build it better. I just don't have the gut to quit my job. And I don't know how big this industry is. Right? So that was the fear at the time. But it's been percolating in my head for some time. And then in 2020, we broke ground. That I hired a couple people, and that went to 7 people at the end of 2020. It was just actually part-time building it.
Yeah, so full disclosure, I'm to the listeners, I am currently sponsoring a deal right now and utilizing Perry's software cash flow portal, and I'm thoroughly impressed right now with the the less amount of friction by the investors to invest. So the investors simply log into the portal, fill out a questionnaire, and then choose the investment amount, and then you can sign the documents all within the portal. Very little friction, very very simple. And to me, this was a game changer because I used I used a portal. So I went from spreadsheets. Well, actually, before spreadsheets, I would actually meet in person and actually print out documents. I would print out
Man,
documents and actually
I'm the
sign in
OG here.
person. We would sign in person, and they would actually give me a check in person, and I'll take it to the bank and deposit. So that was back. It wasn't that long ago. I mean, this is 2015. Even in 2015, we were meeting in person, getting checks in person with the investors. Then I went to another portal in 2019, but it was so clunky that the investors still didn't even want to use the portal, and they would still go. And then I would still have to. It was up to me putting in the each forms on each of the spaces where the investor would have to put in the variables in the
Mhm.
documents, and I would have to put that in, and I would be changing and modifying every single document. I spent so much time just managing documents, and then my investors weren't even in the portal. But anyway, so I through a mastermind is how I came across. So I'm in a Raise Masters mastermind, and I asked the network. I said, "Who do you recommend for an investor portal?" And Cashflow Portal and Perry's name popped up, and that's how I heard of Cashflow Portal. But uh, from the sponsor point of view, our point of view, it makes life so much easier as well as the investors. And now we can actually be focusing on providing good returns for the investor, and the investor can go live. The point of investing passively is not to be doing a lot of work and a lot of friction. It should be literally a click of a button to invest.
That's right. That's exactly right. Thank you for that. That's a great story. I'm very happy to hear that.
Yeah, so it's not really an advertisement for your company.
Yeah,
I'm just
yeah.
thrilled that you have done the hard work to make the process very, very efficient for investors and the sponsors.
Yeah, the one of the philosophies we have is um, we our customers is to serve the GPs, right? Because they pay the building and whatnot. But the GPs are in turn serving the investors. And so what that means is that if there is a bug that the LP has problem with, it reflects badly of the GP. And then the GP will reflect that badly of the company. And so we didn't want that to happen. So we actually initially, we had limited resources and so on. I intentionally put most of the resource in making the LP experience really good, because the GP can put out with that, okay, this button doesn't exactly work on the admin side, but as long as my LPs are happy, I'm willing to put out with this thing for the next 3 months until you fix it. And we didn't fix it in 3 months, we fixed it in like the next week. So there's that. And then the other thing I also will say is this is again in retrospect, the lessons I learned from engineering were invaluable when we started the company, which is a lot of times for every 100 people that have issue with a software, 80-20 rule applies. 20% are even aware that there's an issue. The 80% will just be like, oh, I guess I'm not good in technology, so I don't know how to use this portal. Okay, it's my fault. But then they will just have this internal grudge against the software. And after a while, they just churn, right? And then the other 20% are, okay, there's a bug. And then 20% of that will actually find the time to find the email to email support. And so now we're down to like 4 people. And then 20% of that will explain it in a way that actually makes sense for us to fix it. So by the time that like 0.8%, 0.8 person will email in, and that's one bug. Some people say, okay, this is one bug. No, that's one person reporting the bug. That probably means 100 people are experiencing the bug. Mm-hmm. So we treat these engineering, these product bugs very, very seriously. And so we believe that as long as we keep fixing them, the product gets better over time. But yeah.
Wow. So I mentioned this at the beginning of this episode that you have over 450 co-sponsors and sponsors, and you just started in 2020. So what do you attribute that growth to, or how did you get your name out there? How is this taken off? And I guess the second question along with that is, how big is this market of sponsors just like me and just like you? You're a sponsor as well. How big is this market in the United States? And I'm even a third question. Yeah. Do you have sponsors that are overseas using this?
I see. Great question. So for the first question, each one of those questions is really long, actually. And this is definitely not a promotional video or not. Just we never really chatted before this on how, this is very organic. So you can look backwards on why the company is, successful. I can also say that it's been about almost 3 years. That for the first year or so, we were heads down building product. You can see that I'm not a salesperson. I'm really more of an engineer and a builder. I love building. I love envisioning what the product should look like. We focus a lot on the information architecture. And the fact that I used to work at Amazon really taught me this value of being customer obsessed. And you can be customer obsessed when you don't fix the bugs. That's my philosophy. Or you cannot be customer obsessed if we are not capable of fixing those bugs in a short amount of time. So that's competency. So we decidedly take a route that we focus on the product. And then we believe getting one customer, and then that customer will spread, and their LPs will know. Some of those LPs will become GPs. However, it wasn't easy in the beginning because that was playing the long game, right?
Right. Right.
We weren't like doing that, like a lot of online marketing and whatnot. I do go to a lot of the conferences and to meet people in person, but as you can imagine, that doesn't really scale. Like the time is limited. In fact, I am in a conference right now. That's why the camera wasn't great. So apologies for that. So it's a combination of product velocity and customer obsession and hiring really good team members, engineers, revenue, and support to help the customers. So our engineering team is all in North America, first of all, and two people went to MIT, five people went to University of Washington. One person actually turned on Amazon to join us. One person turned on Google to join us. So it's truly a Silicon Valley company that was brought into real estate syndication. One of the products, I have these anecdotes. So when the LPs are signing documents, the last step is usually the W-9 form. The W-9 form is not easy because if they select LLC, they depending on if they are sole proprietorship or the partnership, they have to either fill out the SSN or the EIN number.
Right.
Okay. And so in order to do that, you either make both fields conditional in hello sign. This is a terminology. In that case, the LP gets confused. Which one do I fill out?
Right.
Or you make them both required, in which case you put zeros into one of the fields, right? So we know this is a problem. And so what we did was we digitalized the W-9 form. So they fill out a HTML form, and then the legal document actually get the W-9 form pre-populated. That would be a classic example of, well, why did that come about? It came about because I am a syndicator. So there is that kind of knowing the industry and knowing this is a pain point and be able to empathize with it. And then the second point is that I have the engineer in mind, say this is going to take about 2 months to build. This will take a typical engineer 2 months. I'm a pretty good engineer, so I think I can build it in 1 month. So I told the team, let's build it in 1 month. So this is the deadline, the internal deadline. The engineer turn around, have it 2 days later. That's another example, which is if you can build everything in like 1/10 as much time than everyone else, you're going to have more features in the long run. And so that's what I think was one of the biggest ingredients that kind of we understand what the syndicators really want. We also understand what the LPs want because I'm an LP as well. And then we have kind of the know-how to kind of deliver. And we're not aggressive with marketing. We just want to do a good job with the existing customers. So not sure if that's
I want to summarize those because those are some key points that regardless of what entrepreneur is listening to this podcast, those are some phenomenal key nuggets. So what I heard is you're talking about speed of product, and you got to be fast. I heard obsession over the end user and the client and the customer, obsession over that. And you got to have the right team in place with the right experience. So those are some 3 phenomenal keys to success that I heard. Is that, did I summarize that correctly?
That's great. Yes, absolutely. Mm-hmm. Yeah.
So
Then,
go ahead. Yeah, the other question was, so do you have sponsors across the world or just the United States?
Yeah, great question, which is also your second question. How big is this market? So
That's right.
We don't have sponsors that are syndicating in other countries.
Okay.
That is not something we support, although support this kind of globalization is not that hard. It's the legal challenges that will be hard. And other countries can see what the US is doing and may be able to adopt it. Okay. So I imagine that this is like in the early days of kind of like almost a new industry. I do have some anecdotal evidence that the industry is growing. So right now we can be in what's called a looming recession or a recession, right? And so things are supposed to slow down, and the multifamily activity has slowed down. However, because I go to a lot of these conferences over the years, I can also say that all the boot camps and the conferences have skyrocketed in attendance. That cannot be true in both cases, right? So what it must mean is that even if the economy slows down, the fact that these mastermind classes or attendance to the bootcamp has increased means that there's more awareness of real estate syndication. So that's just a evidence. I see that they being increasing like 20% year over year. So that's a great sign. The other sign in terms of the market size is we're managing about 500 million equity under management. Some of the biggest players in the space are managing 1.5 trillion. So that's 3,000x more than us.
Yeah.
And so there is still a lot of room to go. So there's that.
Yeah. That's going back to you using the anecdotal examples, and I do too. When I started investing in 2005 through 2015, I bigger pockets. I don't know what year bigger pockets
Yeah.
started, but there wasn't that much awareness of syndication in the early in the 2005, 2010, 2015, and I think it was 2012 the Jobs Act
Yes.
made it now that the syndicators can now start publicly advertising their deals. um, so yeah, there's an increase in awareness that has now brought a lot more syndicators and a lot more passive investors to this space.
Absolutely. Yeah. Yeah. You literally start at the very, very beginning. Yes, the Jobs Act at 2013, but it wasn't formalized or recognized by the SEC until like 2015-ish.
Right, right.
Yeah.
So so what's for the future? So what are some of your goals, Perry, for your business, for Cash Flow Portal, or maybe for some of your syndication deals? Are you getting back into syndication, or are you just focusing on the portal? And I guess what's in the future for you and your company?
Yeah, absolutely. For my personal syndication, I do one deal a year, and that is usually like a $5 to $8 million raise. And since we built a pretty amazing track record with our own personal syndications, it usually gets raised really quickly. This year is a little bit of an exception where we like everyone just kind of a little bit scared, so equity raising is harder, but we still got over the finish line. My own syndication, to be clear, it's my own database. I use MailChimp for my own syndications. There's a corporate veil between what I do and what the company does. And I do like doing my own syndications because it allows me to stay in the game of what I need as a software, right? Just for my own syndication, I should have found out a bunch of things that need to be improved. Not specific bugs, just not the way I think about certain things. And so that was a amazing win for the company's product. For the company, I put in 99% of my time into the company and 1% of my mind into my personal syndications. And the company is definitely very worthwhile building. We got a lot of great customer service, great customer feedback, and so on. And it's really nice to see that the syndicators grow because we grow along with them, right? We think of ourselves as the Stripe of real estate syndication, which is we provide the backend office that helps syndicators right now just manage their cap table, manage their investors, connect with their CRM, have an internal CRM, be able to send out monthly updates, be able to send out ACH, be send out distributions, and so on and so forth, right? In the future, this is like in the next couple of years, we want to do more complexity on top of it. So, for example, what else do the syndicators want? The syndicators want a probably a underwriting tool. So, cash flow portal is the feature, cash flow is the brand. So, cash flow underwriting will be one.
Wow, I like
Cash
that.
flow breaks or cash flow banking, which is imagine right now, if you get a deal, you have to create a credit card with Chase. and or you have to create a bank account. And I believe you need to get permissions from all the co-sponsors to show up. And how do I know that? Because I'm a syndicator, right? So why couldn't we create this amazing, virtualized credit card that allows you to purchase things, and then all the accounting just automatically gets synced to the closing document? Why couldn't we do cash flow lending that allows you to have a portal that keeps track of the current 10-year treasury and be able to predict what the interest rate could be in a couple, not predict, just do scenario analysis on if the interest rate rises to this amount, what your loan proceeds, to avoid this, like 2 days before closing, your loans got cut by $2 million and you're scrambling to raise that 2 million. So a lot of these pain points, I felt it. And the best way to describe is I really want to solve it. I didn't know that I will be, a big meta point is like back in 2015, I didn't know what's syndication. And so I was just buying single family, right? But now I'm actually helping the people in the syndication space. So I will encourage people to just take a step at a time, because you never know that you actually could help not just benefit from the industry, but contribute back into the industry.
That's fantastic. Perry, I'm so thankful that you were able to come on our show, and hopefully the listeners can take away. I think the key message that I'm gathering from our talk now is that our industry has some amazing talent, and Perry, you're one of them, and your team is one of them. And what it's doing is we talked about. I think you mentioned, what was the institutional volume with trillions of dollars?
1.5 trillion. Yeah.
And so there's the institutional buyers that have the private equity, the private capital, but then there's the gap of the accredited investors that are now starting to get into passive investing and starting to get into these syndications is so small, but it's starting to grow. And I think what will give them more comfort into investing into people like myself and you as sponsors is having this comfort that there is high level of talent. We're doing what we can to reduce their risk, reduce their exposure of the downside, and that this new industry, I don't want to say new industry, but a growing industry is really backed by solid real estate professionals.
That's right.
And that's kind of what I'm taking away from this message, is that there's a lot of people jumping into this industry, and there's a lot of talent, and it's serious. We're taking this very serious because we're taking the investors' money very seriously, wanting to limit risk on their part.
Absolutely. I want to add one more thing, which is, the audience, if you want to chat more about this, you can email me, whatnot. One of the things we really care about the GPs is that we want to find ways to help them raise additional equity. So we have a separate domain, a separate website that is a cash flow marketplace. That is for LPs to actually go in to browse the GPs. Now, the GP's own investors don't see the marketplace. That's because we are the Stripe in that sense. But this new marketplace is, it's backed by YC. It's got amazing set of track record information that the LPs can browse, can look at. They can follow a bunch of people. They may be able to see those GPs updates. And then once the deal presents itself, they might watch the webinar. And then they are able to go into the portal to do the actual investing. Imagine now that those LPs don't know the GPs very well, right? So then how could they trust that, hey, will those GPs kind of like take my money and run away? If we control the bank, our platform can say that because the bank is controlled, quote unquote, software layer, not the actual bank, the software layer is controlled by Cashflow Portal, we can monitor the amount of money going in and out. So LP's money is safe. That is so much different than, say, a LP going around and seeing, LinkedIn posts GPs. That's one way to do it. I feel like we're doing it because there's not yet a better way that's created a platform. Now the platform has its own platform risk, and that could be useful. Uh, um, that could have its own challenges and growing and maintaining it and so on. However, I do believe that if I were LP, I would love to go to a reputable platform, buy a Silicon Valley technology company that has all their vetting process, their due diligence process, and their technology to back the fact that this money doesn't go away.
Yep.
Right. And it's nice because real estate is a legitimate industry. It has sustained for thousands of years, and we're just bringing this legal structure to it at this
That's
point.
fantastic. That's right. Well, awesome. Thank you so much, Perry, for coming on the show and talking about your story and talking about Cash Flow Portal and your business. And um, definitely want to have you back on to talk about how you've progressed along with cash flow lending, cash flow underwriting, your different projects in the future. So once you get that up, definitely have you back on.
Thank you, Jeremy. Thanks again.
And that's a wrap for this latest episode of the Wealth Building Strategies podcast.